right, excellent. Oh, we got 23 minutes, so we actually can have a conversation. Very cool. All right, so welcome, guys. So this is basically investing in the crypto winter, right? So right now, Bitcoin's at 20,100, I believe. I just checked. Actually, no, it went up a little bit. First off, let's quantify what a crypto winter means for folks who are, like you or yourselves, who are investing. So why don't we talk about that a little bit?
Sorry, I'm having a tough time. You say what crypto means? Is that right?
No, what the crypto winter means.
Crypto winter means. Okay. Yeah, so winter means winter. So no, I started from our crypto investment from 2016. I experienced the 2 winters. So end of 2018, the Ethereum and Bitcoin price dropped from the peak to bottom, like 95% off. And in the middle, I didn't think there was a winter, but after it touched the bottom, everyone just go out from the industry and they move to different industry like AI or like prop tag or like advertisement tag. So now, because of the macro economy, people think it's a bear market. But still, I think so many people are coming into crypto industry. So this winter is a little bit different from last winter. Still very bullish about crypto. And this winter will be, I think, much better.
Yeah, if you think about the trajectory of crypto, it's still a very early, in early phases of, as an asset class. And so this is actually something like the 6th crypto bear market, right?
Yeah.
Like, I kind of started investing in 2017, so also been around for 2 bear markets, the second one. And the reality is that every time there's kind of order of magnitude more people in the next wave coming in. And there's a lot of volatility because the asset class is quite early. And so this previous bull cycle was really defined by, I would say, prop traders coming into the market, right? Because the previous bull cycle of like 2017 was when retail speculators came in, and that kind of like gave birth to the rise of Coinbase and Binance exchanges. And then this time was like the prop traders, which is why, actually like FTX, where I'm from, like we were started only like in 2019, but a lot of those traders ended up trading on, us and Binance. And that kind of defined this cycle. And so, a lot of us think that maybe like the next cycle will be defined by mainstream retail using crypto. But yeah, I mean, like we're currently in bear market cycle, but we're like really in like an order of magnitude different like number of tech builders, like building meaningful projects in this space right now. And so whereas in the last cycle, like Ryan had mentioned, by 2018, 2019, I would say like people have like generally stopped talking about Bitcoin entirely almost. This cycle, even though we're probably like 90% plus down from all-time high like token prices, we're not, like, I don't think people are talking about it less, which is what's really different. And actually, I would say that like company builders, startup founders are taking the time to really kind of like be heads down and like build towards probably like the next bull cycle right now.
Yeah, I think my daughter said it really well. She's 9. She's like, without the winter, you don't appreciate the summer as much, right? So, and I started my career in 2001 in the Valley, and for those of you who were around back then, that was like the beginning of the crash of what we now call Web 1. So I've lived through a few winters myself, and to Amy's point, I think the most interesting companies kind of get built during this vintage, and that's kind of what we saw in the last vintage. Largely the tourists have sort of gone away, and I think the folks who are in it now are really in it to big, long-term, generationally sort of defining companies. And I think as VCs and as a founder myself, the next founder, I really appreciate working with the people who are in the thick of it right now, building long-lasting companies.
Okay, so how do you identify startups that you want to invest in a crypto summer versus a crypto winter? What are you guys looking at specifically if somebody comes to you now versus if somebody came to you when crypto was at, I don't know, 67K or whatever, or Bitcoin was at 67K, right?
I could start, yeah. I mean, I'd say that largely the framework hasn't changed that much. I think there's a few
you zig and zag along the way just to keep up with what's happening in the market. But largely, you kind of have to believe in a few things fundamentally, and maybe thematically, you're also looking at different things given where you are from, where you like to invest, right? But I think foundationally, we just like to back really great founders who are in it to build for the long haul, and we kind of have to resonate with you on that. And so let's just keep the framework as the same, right? What it was in the summer is the same as it is in the winter. I think the only thing that's probably changed now is like the time to close a deal has probably gone up, right? So we spend a little bit more time diligencing. The founders spend more time diligencing us. And the thing we're really looking for is, are you looking to build something that is going to be around in the next like 3 to 5 years, or is it like a shorter pop kind of thing, right? So yeah, framework hasn't really changed. I mean, we're still sticking to the fundamentals in a lot of ways.
Yeah, a couple of things to add. I mean, in general, if you think about VC investors, we're looking for founders with long-term vision, track record of execution. For us, like, I really like founders that have a bias towards action. One thing is that founders in a bear market that are also, like, I would say scrappy and are hustlers tend to do well, like as an archetype, because capital is a lot harder to raise. And so in a bull market, it's like everyone's flush full of cash, and it's a bit of like a battle for user acquisition. And so founders that are like very aggressive are not afraid to make very bold moves, tend to do well, but like kind of being able to like be in capital preservation mode and having the discipline to know when to be aggressive is a characteristic that I think is like it is like more of an advantage in a bear market for entrepreneurs. The other thing I would say is that like every cycle, like there is one saying where it's like, people have really short-term memory. Because I remember we all learned a lot of things in the ICO boom, like in 2017, but then we forgot a lot of that, like in 2020. Like we were investing as well in terms of like investing in tokens that probably didn't have much of a monetization model. However, like now in the bear market, I think you see a lot more deal structures that are like equity plus token round rather than just a token round, because I think like I think everyone has discovered that it's actually very difficult to imbue enough value in a token to really sustain token prices once it's launched. And so that translates now in this market to investors being a lot more thoughtful about like, how are you actually accruing value on the token? How are you accruing value on the equity side? And actually maybe it's important to actually like get ownership in the equity as well. Whereas I think in the bull market, I mean, these rounds were literally getting done within one meeting with an investor. And so if you were to really take a couple of weeks and study a project's tokenomics, you may just be out of the round entirely. And so that environment has largely changed for the better, I would say.
Yeah, always in the bull market, every deal's coming into our deal flow. So very hard to find the time to research, and so many copy products are coming out. So basically, the bull market is not the good timing to invest actually, but in bear market, we can find out the real winner. And back to 2019, just after crypto, in the middle of the crypto winter, we found out that DeFi will be coming out. So MakerDAO is getting the big market share from Ethereum ecosystem, and after DAI is getting a good position, then many DeFi products came out. And also from our strategy, we invested in many game products, including like Axie Infinity and Sunbug. We were first tech investor of them. We thought that so many tractions are coming in different type of fast blockchain. So we believe pretty soon the kind of P2E game will come to market. So we invested in a lot of NFT games. So I think anticipating a new trend for next bull run will be very important in DeFi winter.
So we're in a so let's think about the folks who are typically not investing in crypto. I'm a family office, I'm institutional, I'm a pension plan or whatever, and I look at crypto and I'm kind of skeeved out by the ups and downs, by the volatility obviously, and by kind of like I don't see any there, right? How do you convince somebody like that to do it? You've been doing this for years, you've seen everything there is to see. How do you convince the guy at a family office who only wants to invest in, I don't know, petroleum?
I can start. Since we do talk to a lot of these investors, I mean, we all have a lot of these investors on the cap table at FTX, and we talk to them as well from venture side. They co-invest with us sometimes. Yeah, I mean, I would say like, first there was, since probably around 5 years ago, crypto native investors that came in and started trading and started investing, and that was the highest risk curve part of this, right? Then I would say generalist VCs that are kind of multi-strategy, like Lightspeed, where I previously was as well, and Sequoia, started kind of investing. And the reality is that these funds have billions of dollars of capital, and so they're allocating, let's say, like 10% of their AUM in crypto, and their thinking is, if this portfolio went to zero, that's still a small percentage, but if this industry became a multi-trillion-dollar industry, you can't miss it, right? Like, you can't afford to miss it. You're managing $8 billion. So in terms of family office and alternative asset managers, I would say that they are just coming in now. Like, in fact, a lot of them are still like kind of learning. They tend to be the most conservative. And it's a similar thought process as like a multi-strategy VC, whereby many of them have billions of dollars of capital. And so they want to allocate some to crypto just to be along for the ride and learn. Some of them are doing it by way of first investing in crypto native managers. And so they're like becoming LPs into some funds. As a first way of like learning, and then as they get more confident, then they're investing into more, I would say, like established projects, whether it's like, like large established projects like blue chip protocols like Uniswap, or like, L1s like Solana, et cetera. And then they're eventually going to get probably a little bit more like risk tolerant and invest in things that are a little bit more on the innovative curve out there.
Yeah, I totally agree with Amy's standpoint. So in Korea, there are not many family offices, but there's so many tech giants and game publisher, AAA studios, and banks are joining into crypto. Not only just investing to LP, I mean the funds as an LP, but they're also investing to directly the crypto project. Also in Korea, like Kakao, which is the most popular messenger app, they made their own the mainnet named Clayton, and also other like big gaming studios like We Made and like Comtos, they made their own mainnet. So I think nowadays many big tech, it's not about family offices, but traditional players are coming into the market directly. And I think the next trend will be not only just family office, but a pension fund, or like big chunk of the money will come in through the venture fund as LP.
Yeah, the one thing I'd add is that I think and it's kind of like the way you started the question as well, right? I think we're used to indexing on the prices of the blue chip assets as the performance of crypto at large. We're like, oh, let's look at BTC, let's look at Ethereum, and kind of see where the price is trending. And obviously that influences, there's a macro that influences that, and that influences, someone's ability, whether they're family offices or big institutional investors, to come into this market. I think we look at it as like, what are the next set of crypto assets that can become blue chip, right? So we have to sort of convey that story. And one of my hopes is that coming out of this phase is that we started delineate a little bit between sort of like price action that happens with the blue chip assets and the kind of like really interesting, meaningful foundational companies that are getting built that we were backing today. So, and I think we just need to do a better job of communicating that to investors.
That was an interesting point. So give me your view on the separation of, I guess you could say, equity investment in a startup versus that startup's coin, right? How do you guys separate that out?
Sorry?
Or are they the same thing? So let's say we have a startup with, I don't know, Cardano or something like that, and you've got a startup, you've got a business technically, and you've got a coin. How do you separate the business from the coin, or do you take them both as a holistic whole? Does that make sense?
Yeah. So just to rephrase, so the question is, just to summarize, you're saying that, how do you delineate between the core equity in the company and the token that the company might issue? I think Amy was alluding to this earlier, right? So we're starting to see a format now today whereby at the earliest stages, you kind of invest in equity, and then there's a commensurate sort of token warrant that comes with that either we invest or we suggest that the company sort of launch with or use as the investment instruments. And eventually, yes, the performances should be tethered closely together. Like the performance of the company and the token price should be commensurate. And I think in the short-term bubbles that Amy was alluding to earlier, those were warped early on. There wasn't really a direct correlation because largely the price was driven by speculation. So our hope is that yes, the value does accrue to the protocol and the token, which hopefully will do well over time. So that's sort of the guidance that we give companies today, that we believe will have a distributed or decentralized model, the token for which is sort of like the participatory instrument or currency to engage in the protocol. So yeah, the hope is that they are very closely aligned and the performance is aligned with the token.
Yeah, in an ideal world, the project is thoughtfully kind of creating tokenomics tied to some sort of utility and usage, customer acquisition, customer retention methodology, and then you have the equity value being accrued as well. Now, in reality, there are a few projects that have done this, right? And both in the 2017 and the 2020 crypto bull markets, there were many projects created in which the token really was created as with a quick pump mechanic, I would say.
Incentive mechanism.
And many crypto native investors were able to look at the tokenomics and predict essentially the trading behavior of the token. I mean, if it is designed to essentially accumulate in value kind of unsustainably, then that if you're going to invest, you need to get out at a certain point. Otherwise, there's a deflationary, impact. And I think really understanding tokenomics is really important. In 2017, many crypto investors did not have token lockups. And so what would happen in the previous bull cycle was truly that that the investors were dumping on retail. Because retail investors were really getting really excited when the token launched and they would buy in. The smarter kind of crypto investors who knew the dynamics of the tokenomics would essentially sell into that rise, and then you have this concept of retail holding it back. This is why in the most recent crypto cycle, projects got smarter around that, and almost all investors were locked into a 2 to 4 year lockup on the token. And so there's a lot of press around oh my gosh, the investors are all dumping on retail. The reality is that most investors are actually locked. Most investors have not actually capitalized on the value of the token in this cycle because of all the learnings in the last one. And so there's actually a lot of nuance that drive token value in the markets because a lot of times they're artificially inflated or deflated. And so I would say that as a crypto investor, we constantly study the tokenomics. We understand who's holding the tokens, what their vesting period looks like, and so that we can actually look at kind of depression and pricing and be able to kind of get ahead of that sometimes in our both our exit strategy and also helping with the PR of the project. So this is hopefully to add a little bit more nuance on what happens with token price and market that we look at, but yeah.
So I think conceptually, if all operation is run by a blockchain, for example, DeFi, definitely there's a team, but all the operation, the product is run by a smart contract. Then I think a token is appropriate. But if there's something like centralized operation happening, such as a game, I think equity is more proper to raise. But realistically, I think depending on how the private fundraising market, I think a startup choose to go through the token or equity. For example, in US market, there are so many venture capital and there's so much dry powder there. So I think this is many startups in US. I think they're better to raise equity. But in Asia, there's not the VC market is not big as the US market, but there are so many retail traders, so many speculative traders there, also so many individual investors, angel investors. So in Asia, the raising through the token fundraise is better than equity fundraise. So depending on the market condition and how the characteristic is, I think a startup will choose how the fundraise structure.
All right, so we've only got a few minutes left. Just down the line, why don't we say what you are specifically looking for right now in terms of investment, and when do you think the winter's over? When do you think we're all going to be Lambo again?
Yeah, I will take first. Yeah, so we are based in Seoul, but we have an office in Bangalore to target India market, and also Singapore and US. So mostly the US office is targeting like a Silicon Valley startup, but mostly I think infrastructure is very good in US. But in Asia, I think application like including like game or like K-pop entertainment and other like the application to target big population is much easy to find out as the deal. So in Asia part, we are looking for the good applications.
Okay. And when Moon?
Yeah.
When Moon? When is it going back up?
1 to 2 years later.
2 years? All right.
Yeah.
All right, we got 2 years. All right, go for it.
Yeah, I agree. Like we probably have over like 60% of our fund deployed on the infrastructure side right now. But I would say like I personally would love to invest in more consumer use cases in crypto, and looking for teams that have experience building consumer products, and which actually is pretty hard to find in terms of crypto native teams. And then I agree with Ryan. I think that the winter is going to be significantly longer, even if we're going to see small micro cycles, kind of corrections, like in the positive direction. Like I think it'll be much longer.
So 2 years, something like that? A longer?
Maybe like, yeah, probably a couple of years. I mean, the reality is that it's very closely tied to macro markets right now. And so I would say like when you see sort of like, and I think that is probably a longer recession. And so, yeah, net, yeah, a couple years.
All right, go for it real quick.
Yeah, I like to use this analogy about airplanes and airports, right? When the very first airplane got created, there were no airports. The airplanes got bigger, airports got bigger, and then so on and so forth. There's these cycles. And I think we're in that cycle of just needing bigger airports now, which to me translates to infrastructure. I completely agree. That's also sort of like where I invest typically and what we're looking for. So I think that's kind of where the magic will happen over the next couple of years. And yeah, similarly, I think, I don't know, I'm predicting this is going to be really hard, but I think 2024 might be an interesting time.
2024. All right. So 2 years all down the board. All right. Thank you guys very much. Hopefully this was helpful, and thanks.
Thank you.
Yeah.